Shitim Sharif. Morning, Tuesday, July 2nd, 2024. McDonald's, MCD. I bought yesterday. There was a couple of stocks that I added yesterday, and McDonald's was one of them. And that's the reason here, right here. No other reason than what is obvious on the screen. The last two times it touched that white line, it bounced, and here we are again. Now, does that mean that it's gonna hold? We'll see. I also saw a put spread, kind of a risky play, but we'll find out. I did a 245, 240, so very close. Okay, that could be very tight, but we'll see. Now, for reminder, that white line, okay, long time, multi-year trend line. Let's go back 10 years. Okay, yes, there we go. So we'll see. If not, there's a couple of support right below it at 242, 243, and then of course at 236. Okay, so there's a couple spots, but it's getting there. Who you know what I held my nose and bought. Oops. Next up, DRI, Darden, came down almost to that support line. So if you want to buy, there you go, 146-ish. If you want to be safer, put in an order at 145.5, 145.6. That's the spot. Okay, that has been there 3 times. 1, 2, 3. So it could be a 4th time. Okay, you don't have to buy at exact spot of 146.17 or whatever it is, but I would say 145.6 would be a little bit safer spot for Darden, aka Olive Garden. Cake. No, there is nowhere I'm touching cake. To be honest, as far as food wise, I'd rather go to Olive Garden than Cheesecake Factory. The last 2 times I went to Cheesecake Factory, the food was atrocious. The cheesecake was great, no doubt. I wouldn't mind walking in there, go to the counter, buy a slice of cheesecake and walked out. But I'm not eating that garbage. No, there's nothing here. If you really want to do it, buy it. I wouldn't touch the 50. Okay, even though the 50 MA is kind of lined up with, there's a zone. It's always okay. You see it? You see that zone? Okay, I don't want to draw it in, but it's there. I'd rather wait until the gap fill. The gap fill is lining up with the 200. So yeah, I'd rather do that. Okay, on a major pullback. Last of this is the one that's more love. It's split. I've been watching it. It's definitely fit in the cult stock following like Tesla. There's a couple of stock that I use the word cult because it's so well loved. Okay, let me remove this random. Okay, now that it's split, all the whatever line I used before is no longer applicable. Pretty nasty wick down, and it came down to ref low. See that? It's ref low and previous high. I mean, the beauty of charting, right? Look at that. Just to show you how perfect it lined up. Zoom in. Look at that. See, that's the previous high, and that's where it touch. That's where it wick to and bounce. So does that mean that I'm gonna buy it right there again? If you really want to get into CMG, I think the area to buy is, I would rather put an order in down here, like 57 and below, okay? Because it's a consolidation area, right? So it came up and it consolidated for a good month, okay, more than a month before it break out. Of course, that's the split announcement, all that stuff, right? And it run. So now after the split, it's coming down, and it likely will retest that consolidated area. So to me, if you really want it, I say do 57, 5. Okay, the highest I would say is 58, because I don't care about the 100 MA. Okay, if you want to buy there, you can. Not me. I rather sell put spread at the gap fill. To me, that's a better play. Do something like a 55, 50 put spread. This way, um, I wouldn't mind owning some CMG, but it has to fill the gap. Okay, that would be the spot. As far as outright buy above that, I'd rather do it. 58 would be the highest. Ideally, 57, 57.5 ish. But yeah, but gap fill, absolutely. That's it. Let's see how the econ data will unfold today and tomorrow.